Welcome back to my channel once again. So we will be discussing about the tariff war that Donald Trump has imposed to all the countries across the world. What is the implications of that and where the FII DIS are putting their money and where our market is going to lead in coming days. So as of now the tariff has been imposed on China by US that the baseline is 10 and the reciprocal tariff additional 125 on the Chinese imports, bringing total tariff rate to 135%. So additional levies what they have done, certain products such as electronics and subject to further tariffs related to national security concerns potential increase total tariff rate to 145% on some items. So what retaliate the China did to US? They also has imposed increase from previous rate a new level of 125% on wide range of US imports, and they have targeted mainly on liquefied natural gas and coals, agricultures and automobiles. So Donald Trump has paused the tariff rate to all the countries except China for 90 days. So let's come to FINDIS data. So what they have done in the last month, and we will cross check the data of FIDS client proprietors. This is the data of last Friday and we are comparing with the last to last Friday's data. So we will come to know the derivatives positions of a big players. We can know where they have hedged and do they are bullish or bearish. So let's begin with FIS. In future index long they were having 29% and short 71%. So now they have 25.4 of long percentage and 74.6 of short. It means they have reduced the long, increased the short by 4%. It means they are very much bearish in future index. Options call they were having 2.81 lakh of call buying contract. Now they have added 1.50 lakh contract. So this was a long build up they have done in call. So they have 4.32 lakh of call buying, and in put they were having 3.55 lakh of put buying. So in put buying also they have done a long build up of 1.66 lakh contract. So they have 5.21 lakh of put buying. So this is a pure hedge, call versus put more on a put side, but they are negative in futures. Till in April they have sold for 34,641 crores. Good number of loss they have paid in options, I believe, in last week. So DI has supported the market by purchasing 27,588 crores in the cash market against the US sold for 34,000 crores. Anyhow, we will not check DII's data because they are not too much active in F&O. Now we'll check the data of client. Client are also known as retailers. Those are us, and we won't be having good knowledge about the global, and we don't know where the big player are putting their money. So mostly we will be ending up in losses only. So now client what they did in future index long they were having 59 percentage and short they were having 41 percentage. So they have reduced the long, increased the short by 1 percentage. They have 58 percentage of long and 42% short. Option index call they were having 1.97 lakh of call writing contracts. Now they have increased their call writing by 1.65 lakh contracts. So they have 3.63 lakh of call writing contracts. Input they were having 4.10 lakh of put writing contract. Put writing also has been increased by 85,000 contracts. So they have 4.96 lakh of put writing contract. So see they have hedged their positions mostly on positive side, and in futures also they are slightly positive only. And we have seen they have sold for 1083 crores till now in April. Now let's check the proprietor desk data. Future index long they were having 27.2 and short they were having 73%. So they have booked the profit on short side. They have covered their short. Now they have 40% of long and short they have 60%. It means they have increased the longs, reduced the short. So they have booked the profit on a short side, but still they have a open contract on a short side of future index. Option index call they were having only 84,000 contracts of call writing. Now they have unwinded only 14,000 contracts. Still they have 69,000 call writing contracts. Input they were having 18,000 of put writing contract. Now they have increased their put writing by 47,000 contracts. So they have 65,000 of put writing contract. It means First of all, they have reduced their contract size here. They are not that much active in options, but they have a hedge position in options and slightly negative in a future index contract. And they have purchased for 304 crores in the cash market. So see, the data is not that much clear of FIIs and the other participant here, but FII is negative only. Now let's check the change in open interest. Nifty's expiry will be the next coming Thursday, 17th April. The PCR is at 0.81, slightly positive. So at this week expiry, we don't have good volumes anywhere. So we will not see this week expiry where it's ending. But we can see mostly all they are purchased a put 22,500 and they have also purchased a call of 23,000. For next week we can see a huge data here. So at 23,000 there are the call writers who has unwinded their position due to a good positive move. So now we can see here put writing came at 22,800 and 22,900 and also 23,000 we can see, and this is for the next week expiry 24th April. And here also we can see 22,500 people purchase put and also they have purchased 23,500 call. So they have hedging both the sides and mostly we can see put writers here and these are the call buyers here. So slightly positive for the next coming week we can see. Next week is slightly positive the data is, and for month end the data is also slightly positive only. Put writers and call buyers we can see, but this data can change at any time. This all contracts unwinding and long build up can happen anytime due to the market volatility, it will move. Now we'll check the technical analysis. We'll go by the US market first. So US weeks they are at 37.55. We have seen the volatility huge the last week and still the fear index is showing the war is not over. Now let's check for Dow. They are trading at 40,212 and it was positive on last Friday. 600 points of move we can see. Same with the Nasdaq also. In one day chart we are seeing this 2% of move we have seen in Nasdaq also. This was due to the tariff has been paused for 60 days, the positive news. So now come to our market. Our VIX is also at 20, not huge like US, but still it is a good number for us, and it has came down 6% on Friday, so it is at 20 now. When the VIX is more, the premiums will be more in options, and also the buyer gets good betting and profits in options, call versus put. Both depends on way the one-sided market moves. Now let's come to Nifty in one day time frame. We are checking there was a good gap up on Friday and that sustained, and we have seen a positive close of 429 points and they are at 22,828. Market can turn anywhere, it can go up or it can go long. As per the data we don't have any positive or negative, but FII have a negative view only. Everything depends on Donald Trump's hand. If he is happy he will make everyone's happy, and if he is sad he will ruin the markets of any country. So Bank Nifty in one day time frame we have seen 700 points move and they are at 51,000. So same with the Bank Nifty also. If you are doing a intraday in options, we don't have a positive and negative view, but it's better to go with hedging only. You can buy put and call both the side, because last week we have seen the market has moved on both the side and both the side people got profited. But we don't advise anything on buying or selling of options as of now due to the huge volatility moves. So this is a good time to invest in our market. You can top up your mutual funds, you can increase your SIPs, or you can put a lump sum, whichever plan you are holding now. And we can also see the gold has been increased. It has appreciated 1.86 percentage, 1700 points it has moved. It is at 93,745. So super thing many people were bearish on gold. They told 50,000 gold will come, and I was very much bullish on gold. So mostly many of my clients and friends, they have purchased gold ETFs long ago. They have top up also. Gold is always a appreciating tool. Only when such kind of scenarios come globally, gold is only a hedge. Bitcoin is also a consolidating phase. Only we have nothing on Bitcoin. So guys, stay invested. Don't worry, market will today or tomorrow it will recover. If you are in a huge loss in any kind of a good fundamental strong stock, average it out, or you can stay tuned. No issues where the market is going, but don't cut off in loss, or don't be very fearful about the market. It will always give an opportunity for everyone. This is going to settle soon, and a good positive thing can come to India due to the Chinese tariff war. So stay tuned, invest in the stocks. Those are mostly on the import side to US, that can impact by the US China tariff wars. Watchful for such companies. So that's it for today, guys. Hope you like my analysis. So please do like, share, and subscribe to my channel. Thanks for watching. Bye.